Welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. It's put up or shut up time for the SEC. They are required to give a response to ARK's application for a Bitcoin ETF, spot Bitcoin, by August 13th, with many other Bitcoin ETFs, including BlackRock and WisdomTree, just a few days behind. Will they say yes, no, or punt it down the road? Let's talk with a man who has one of those applications in. That's Matt Hogan. He's Chief Investment Officer for Bitwise Asset Management. Matt, you have also filed for the Bitwise Bitcoin ETF Trust just behind ARK. Handicap this for us. Does the SEC say yes, no, or punt it down the road?
Yeah, if you look at the history of ETF applications around spot Bitcoin ETFs, Bob, they've historically punted it down the road. In every case since 2016, they've taken up to or entirety of the 240 days they have to review these applications. These are complex applications with a lot of data. I think they're likely to extend this until the final review, which comes in January.
So if they want to push this off further, the drop dead date is January. Is that right? They can extend it again.
That's right. The law gives them up to 240 days. What this August 13th deadline is an interim deadline, sort of like a check-in. Can we decide now, or do we need more time to review? My guess, I don't know, but my guess is that they'll need more time to review, as they have in each instance in the past.
Yeah, we got a long line here. I mean, besides ARK, we have Bitwise, BlackRock, Van Eck, WisdomTree, Valkyrie, First Trust, Fidelity, and Grayscale wants to convert into an ETF as well. So talking to the community and just getting a sense, they seem very excited, the crypto community, because the current crop of applicants has this surveillance sharing agreement in it with exchanges like NASDAQ and the SIBO that would allow for the sharing of information about market trading activity and clearing activity and customer identification. And supposedly this will reduce the chance for market manipulation, which is the main complaint the SEC has. It also seeks to ensure that investor assets can't be diverted by the exchanges to an unauthorized party. That was the big issue, I know, at FTX. So is this enough? Is this sufficient to address the SEC's concerns about fraud and manipulation?
It's a great question, Bob. You know, I think it's very helpful, but it's not a silver bullet. Look, what the SEC wants is for a spot Bitcoin ETF that the American public can trust, that provides careful exposure to the price of Bitcoin, that doesn't lose customer assets, et cetera. So they're evaluating a totality of circumstances. The surveillance sharing agreements between traditional exchanges and crypto exchanges like Coinbase are helpful, but it's also helpful that we've had a Bitcoin futures ETF on the market for almost 2 years. It's also helpful that the regulated futures market is large and robust and growing. It's also helpful that we have a better understanding of crypto custody, of broker transfer. The totality of circumstances is what the SEC is looking at. I don't think there's any silver bullet, but I do think if you step back and look at those totality of circumstances, we're in a very positive state. I think the market is ready for a spot Bitcoin ETF. I think investors deserve a spot Bitcoin ETF, and I'm hopeful we'll get one sometime in the coming months.
Yeah, I'm in agreement with you. There is a lot of optimism out there in the crypto community. I've heard several reasons. Some say, well, look, the SEC has just approved a 2-time leverage Bitcoin ETF. Well, that's got to be a sign that they're sort of softening up a little bit. But the biggest thing that I've heard, which makes a lot of sense to me, is this lawsuit that Grayscale has brought against the SEC. So Grayscale wants to convert its Grayscale Trust to a spot Bitcoin ETF. The SEC has denied them. And in some of the hearings, the judge seems to have been very hostile as to why the SEC has approved a Bitcoin futures ETF and not a spot ETF. Very aggressive in his questioning. I just spoke with Michael Sonnenschein from Grayscale. He tells me a ruling in the case is expected any day now. Could that move the dial if it went in Grayscale's favor?
I definitely think it could move the dial, Bob. You know, you and I love ETF history. We know that in Canada, which has spot Bitcoin ETFs, it was a lawsuit that provided the initial breakthrough that got us over the hump there to get those listed and trading. I think this would be an important catalyst. Grayscale is arguing that you can't have a futures-based Bitcoin ETF and say that there is something wrong with the price of Bitcoin that doesn't allow you to have a spot Bitcoin ETF. That has a certain amount of logic to it. And if the courts can enforce that, that narrows the window of the questions that the SEC can ask about this space. Again, it's not a silver, there is no silver bullet, but it is another piece of helpful evidence that might help push us over the edge.
Yeah, I was very impressed with how aggressively the judge questioned the SEC in the Grayscale case. They seem to imply that the SEC hasn't really explained to Grayscale exactly why they have been turning them down. So if a spot Bitcoin ETF is approved, should the SEC approve all of them at once? What happens? Let's assume something happens. Should they approve them all at once? Do you think that should be the case?
I think there should be a fair playing field that allows us to have multiple spot Bitcoin ETFs that compete in the market. That's actually the best outcome for investors. It will allow prices to be the lowest. It will allow competition to be the highest. It will allow service to be the highest. It's what investors should want, and it's probably the fairest to the industry. There maybe shouldn't be just a lottery-based system based on when you filed and when you get approved. Let's line up the best spot Bitcoin ETFs at the starting line, say go, and see who can win the market. You know, we're confident at Bitwise that if we have the opportunity to compete in that space, we'll be able to win our fair share. But most importantly, that would be what's best for investors. And that's really what we should be arguing for here.
Well, certainly we have seen the first mover advantage in anything that's out there in the business, particularly in ETFs. So this would make a lot of sense to me. And what do you make of this idea? Oh, BlackRock got in because BlackRock must know something. Or, gee, BlackRock has a great record of applications. But I'm not so sure that they're not simply watching what everybody else is watching, particularly this whole debate with Grayscale and the lawsuit going on. I mean, what do you make it when people say, oh, BlackRock must know something?
Yeah, I don't think there's any conspiracy theory. There's no whispering of messages to BlackRock. What there is the world's largest asset manager, a very sophisticated player in the ETF market, looking at the totality of conditions and saying they think the time is right for a spot Bitcoin ETF. And on the other side of the aisle, equally important, BlackRock saying we think Bitcoin is an important asset for investors to get exposure to for the next year, the next 3 years, the next 10 years. Again, I don't think there's any special conspiracy, but they are a sophisticated player. So it's another sign that the best ETF experts in this market thinks conditions have matured enough to allow the SEC to say yes, and I hope that's what we see.
And what about this endless debate about whether cryptocurrencies are commodities or not? We haven't even addressed that. Could you explain simply, Matt, you've done this before for us, why is Bitcoin considered a commodity, but the SEC contends other coins apparently are not? What is it about Bitcoin that makes it somewhat special, it seems, to a certain extent?
Yeah, it's a great question because the SEC has singled out Bitcoin and said it's clearly a commodity, and the CFTC has agreed. It's all about centralization, Bob. You know, securities laws are designed to protect investors from insiders knowing something about a company or an investment that the public doesn't. It's about, you know, let's not let those insiders pull the wool over the eyes of the investing public. But with Bitcoin, it's so decentralized. We don't know who created it. There's no single person in charge of it. It's globally distributed around the world. There are no insiders. All the information is public. And that's what makes it clearly a commodity. As you go from Bitcoin to Ethereum to other assets, the degree of centralized control increases and the question gets more complex. Eventually, I think we'll have legislation solve that. But what's important for investors to understand is that the regulatory status of Bitcoin specifically is very clear. It's a commodity. It could fit into an ETF trust. And I think both of our major regulators in the U.S. agree on its commodity status.
You mentioned legislation. What are the chances of getting congressional rules on crypto? Everybody seems to want that. It seems to be very far away, though.
You know, I don't think it's as far as people think, Bob. I've been on Capitol Hill recently, meeting both with Republicans and with Democrats, and I'd say two things from those meetings. One, the level of understanding about crypto is extremely high. Congress didn't know much about crypto a few years ago. Now they're really experts. And two, the bipartisan sense that we need legislation to provide a firm regulatory framework for crypto in America so we can compete internationally is very clear. Look, you have the two largest regulators disagreeing on whether most crypto assets are securities or commodities. The right solution there is for legislators to come through and make that clear so that U.S. innovators can win in the market. I'm actually optimistic we'll see that sometime within the next 2 years, even with the challenging sort of network in Congress we have. There is real progress there being made.
All right, 2 years. I'm going to hold you to that. Now, stay there, Matt. I want to pivot for a moment. I want to bring in a special guest, a friend of mine, legendary financial author William Bernstein, joining us now with a new edition of his investment classic. This is the 4 pillars of investing on how to use ETFs. Partly, I'm going to talk to him about building a long-term portfolio, but he's the author of many other books, including The Birth of Plenty, one of my favorites book, A History of the World's Standard of Living, essentially, and The Delusion of Crowds, Why People Go Mad in Groups. Bill, thank you very much for joining us. And before I get to your book, I think you were listening there to our discussion on Bitcoin. Do you have any thoughts on crypto? Is it money? Does it deserve to be considered an asset class? What are your thoughts?
Well, I think that the key term is the word itself, cryptocurrency. It is a currency. And one generally doesn't think of currency as part of an investment portfolio. It's a unit of account, but it's not an investment product per se. So I would no sooner invest in cryptocurrency than I would in, Swiss francs or English pounds and then stick them in the mattress.